The M&A of Elis. A summary of the last 10 years, and especially with focus of the last 2 years in the pandemic. An update to a video that I did, I think 2 years ago, and I think it's very interesting. So stay tuned. Hi, my name is Christian Wurzelball. I support the textile service industry with management training, know-how in textile service 4.0, and practical hints that we can implement right away. I'm not a financial analyst, at least not an official one. And the purpose of this video is also not a financial analysis, but that it shall help entrepreneurs in the textile service industry to understand what is going on with Elis. And the reason is that Elis has 25% market share in Europe and is also a major player in South America, and probably one of the biggest in worldwide in the industry. So it's an interesting company, and therefore it makes sense to analyze it. And one of the issues is M&A, and there are different other issues, so stay tuned and subscribe to the channel, and there will be a few more videos regarding this topic. So if you're interested, then you can look forward to some additional videos in the next few days. Yeah, so first, what's the performance of Elis, also compared to about 60 other companies of a similar size in Europe. So black is the index of these 60 peers, and Elis is part of this index. So I think it's the right index to choose. And you see that this index is up 15% in the last 5 years, and Elis is down basically 23% in the last 5 years. So you see that there used to be quite some fantasy in Elis, and it was very enthusiastic when they bought Berentzen, and but then reality kicked in, and you see that also Elis is more vulnerable to market issues like COVID-19, and also right now with the Ukraine crisis. So basically, if the total market has a cold, then Elis is quite sick. So that's the general overview. And what about M&A? So there have been 139 transactions over the last 10.5 years. So I've included already some transactions of this year. And about half of the transactions are below 3 million euros in revenue, or 5 million euros in France. That's an interesting takeaway. So there are quite a lot of small transactions. I personally am a little bit, I do not understand why they are doing this personally, because you lose quite a lot of revenue when you buy such a small enterprise, and the transaction costs are also significant. But in any case, half of the transactions are small, and Berentzen makes up still 2/3 of the total revenue that they bought. And the purchasing price, the total purchasing price over the last 10 years is almost exactly their current debt. So they have about 3.5 billion in debt, and they purchased companies for 3.5 billion euros. And they have 3.2 billion in goodwill. So they have purchased the targets with a premium. and the revenue of all these purchases in the first year was 2.2 million euros. So out of the current revenue of roughly 3 billion, more than 2/3 are actually from M&A. And the targets were quite profitable, so they had on average 12% operating margin. So that's the summary. And that's now the summary of the transactions of the last 2 years during the pandemic. I personally thought that they will reduce their M&A activity, and there haven't been so many publications of Elis. So I thought, yeah, there are just a few companies that they bought. And then I was quite surprised that they bought a huge amount of targets. And it's all over the place. So you have targets for industrial garments, so companies with industrial garments, mats. You have one company with clean room. You have healthcare quite a lot, hospitality. That's the main focus still, and also pest control, and one company for hygiene, and two garment producers. So that's basically the whole list. And if you subscribe to my email list, then you get a notification when I make the blog, where you can then download also the Excel sheet, and where you can also read it, because I understand that YouTube is probably not the best way to digest such a spreadsheet. Yeah. So and then we had and then there is the issue of the growth. So when you look at all of the transactions, this is just a small part of these transactions. Then you can add up basically the revenue of these transactions, the effect of the revenue that they would have on Elis. So when you start in the year 2012, and you add the transactions that they did in 2012 and 2013, and then the next year, and the next year, and the next year, and then the Berenson transaction, and the Indusal and Lambras, and so on. And then you end up with a revenue that they would have had if they wouldn't have lost any customers, if they wouldn't have gained any customers, if there is no inflation, if there is nothing, just M&A. So if it's just M&A, the revenue would have been 3.2 billion last year, and next year about 3.3 billion euros. So this orange line is just M&A, yeah. And normally, this is from the German video, from the German version. Normally, you would expect that the actual revenue is above the M&A revenue. So normally, the contribution of Elis would be that you have an additional revenue to the actual revenue that they bought. So normally you buy a company with, I don't know, 20 million euros in sales. Then of course you lose some customers because they do not want to be on board. Then you end up with 18 million at the end of the day. But then you have success in the market, and you have organic growth, and then and after 5 years, these 20 millions that you bought originally are then at the end of the day 25 million, 27 million, 30 million euros in revenue for this company that you bought. So normally you would expect that the actual revenue is higher than the revenue that they bought. So now the actual revenue is basically the same, used to be the same until 2018 as the revenue that they bought. So you could basically say the additional revenue of the M&A was basically the growth of Elis until 2018. Then they had 1 year where their actual growth was higher a little bit. So they had 170 million more in revenue 2019 than they would have had with M&A, which is something that you would expect. Then, of course, the pandemic hits, and right now they are still below their run rate, and they expect between 13 and 15% organic growth this year. So the revenue should be something like 3.5 million, something like this. Yeah. And it would be slightly above the revenue of M&A. Yeah. So that's the comparison. And it's actually a very sobering analysis. And so this is a really nice chart. You see a yellow line, and the yellow line is basically the blue line with additional growth of the GDP. So if Elis would have had a growth that was the same as the GDP growth in the European Union, then Elis would have had the revenue of this yellow line. So you see that basically the revenue was even 2019 below the GDP growth. And of course, GDP was reduced during the pandemic, but not as much as the impact on Elis. So it will be hard for Elis even to catch up with the GDP growth by the end of the year 2022. Yeah, that's the comparison here. So you can say basically that the growth of Elis is less than the GDP growth, if I have no mistake. So subscribe to the channel, and you get the access to the spreadsheet, and then you can check it yourself. But I think it's correct that the growth of Elis is basically below GDP growth, and but you can. But my personal experience is, if you are successful in the industry, then it's possible to have a growth of, say, 2 to 6% above GDP in the long run. So you can exceed GDP growth, say, by 2 to 6%. And I've done it myself at Wurzelball. We had above 7% GDP annual growth rate for 10 years accumulated, so on average 7% every year. And I know also some other companies in the industry that have similar growth rates. So basically, the growth rate of Elis is not really impressive. And when you compare it with Cintas, I know it's a little bit nasty, and you would start the revenue of Cintas at the same revenue as of Elis in 2012, and you would say that Cintas has bought the same companies that Elis has bought, but Cintas has an annual growth rate of 6.3%, then you would end up with 4 billion euros before the pandemic. Then the pandemic hit, where Cintas had just a growth rate of 2.4% and 2.8% and 0.4%. And right now they have again a crazy growth rate in the first quarter of 9%. So this is all organic growth, and therefore you have a gap of 1.2 billion euros between the growth of that Cintas would have had and that Elis actually has achieved. So that's the Cintas is an American player, a huge one, with a main focus of rental garments. And in this case, you see that there is quite some success in organic growth, as you would expect of a successful company. Yeah, and there you see also the difference in the share price. So the share price, the blue one is Elis. Elis that starts from the IPO of Elis. So it's in 2015 when the initial public offering of Elis was done. And right now it's the share price is up. The share price is up 0.6%. And the peers that we mentioned before, the 60 other companies in the Euronext index of similar size, are plus 29%, and Elis is Cintas is basically plus almost 400%. Yeah, slight difference. So the question is then, why is the organic growth of Elis subpar, or actually I would even say not really existent? It might be an error in my calculation, so maybe it's my fault. I cannot exclude this, so if there is an error, then I will take this video down and I will make another video where I explain my mistake. And you can have full access to the spreadsheet and check it yourself. Then the other reason could be that the whole textile service market is below GDP, which is not the case. So I do not think that this is the cause. So there is always outsourcing going on. Hotels, hospitals, nursing homes, and so on are outsourcing the textile service, and therefore there is an inherent market growth. And I would expect actually that the growth of the textile service industry is something like 2 to 3% above the GDP number. So this is not the cause. Of course, during the pandemic, this was most probably the cause, because the hospitality business was down big time, and you can say hospitality is something like 25 to 30% of the total market. And if this portion of the market is minus 70%, then of course you are below GDP growth. So during the pandemic, yes. During the last 10 years, no. Then of course one cause could have been the currency fluctuations. Elis bought a few companies in South America, and they have lost at least plus minus 100 million euros in exchange rate, due to exchange rate, where the Brazilian real, for instance, was higher when they bought the company and is lower as devaluated ever since. It's a little bit stronger now, but at the end of the day, they lost some money there. And then, of course, burning of customer lists. This is a big one. I would assume that this is one of the major causes. So the question is customer satisfaction. I cannot say about I cannot say anything about customer satisfaction of Elis on a grand scale. I can only say my experience from the German market and also some other nations in Europe, where I have observed the performance of Elis regarding the service. And I must say that this has some room for improvement. Let's put it like this. And there are issues with customer satisfaction, and therefore this could be a cause. But one of the major causes, of course, change in ownership. So when you have customers that are used to talking with the owner, that have the phone number of the owner, and they would call him or her if there's an issue, and all of a sudden they have to deal with a plant manager, and everything is more complicated. Then you lose the relationship, and you lose also some of the customers, not all, but some of the customers you lose just because of the change in ownership. So this is most probably a cause. I'm sure that for many customers this is a cause. And then, of course, you buy not suitable revenue. So you have, for instance, a focus of Elis for rental linen and rental garments. And when you have customers when you acquire revenue with customer-owned goods, so COG revenue, for instance, then you want to convert it into rental linen. But if the customer doesn't like your item list, then you lose him, and he chooses a different supplier. So at the end of the day, you have some loss due to customers that you bought that do not fit into your marketing strategy. That's always the case. So that's basically burning of customer lists. And then you have one cause could be that they do not have a good sales force, no success in sales. I do not think that this is the case. I would even say this is, I know that they have success in sales. So whether the success in sales is average or above average is a different topic, but I would say they have quite some success there. And then, of course, the normal churn rate. So how long does the customer stick with the lease? We know that there are issues in some locations. It's also mentioned in the annual reports or in the investor calls. So this is, we do not have real stats here, but this could be a cause. And then a lack of price increases, so that the lease is very nice to customers and doesn't increase the prices. I would I would say no, this is not the case. Then the lack of price discipline for new clients. This is something I really don't know. So what's the average pricing of a lease? I know that in some cases they make quite competitive pricing for new contracts, but whether this is a cause for a lack of revenue, I don't know. I would rather say personally, my feeling, but I don't know, is that the reason is rather that they burn the customer list that they buy, and I think also they have quite some churn rate that they could improve. So that's basically and of course there is some currency fluctuation. That's also the case. That's the cause probably of this performance. And then when you look at a similar chart regarding operating margin, so you can make the same math with the operating margin, original operating margin, and then you add basically the M&A impact on the operating margin. That's the gray bars. So the gray bars are just M&A. So if you would have just M&A, you would not improve your efficiency. You have no changes in your purchasing prices, no changes in electricity or in the gas bill, no changes. Just what is the additional operating margin with M&A? They publish the contribution of the new acquisitions every year to the operating margin. So I just did last year and add the published additional operating margin, and this is then the next year. So basically that's the gray bar. And what you would actually expect is that Elis, of course, should have an increase in, so this should actually be the case. They should have a higher operating margin than they are buying. So basically the message is that they have less operating margin in every year, even in the year 2019, where they made some improvements there. Still, they have less operating margin than all the companies that they acquired. So as mentioned before, they buy companies with quite some margin, so 12% on average. Yeah, and basically then of course the pandemic hits, but they have still to prove that they can have a higher contribution to the assets that they buy due to their operational efficiency, synergies, and so on. That's the analysis that I did. Sorry, that I didn't have a better result. But this is probably also the cause why we see such a performance in the share price. The M&A is basically not turning out to be a success story. Sorry. That's my personal opinion, my personal analysis. You can check it yourself if you want. And don't forget to subscribe to the channel, and we'll see us in the next one. I have a few videos regarding Elis in the pipeline, and there are also some other videos that I will want to publish in the next few days. And we see you there. Bye-bye.